Viper 2008 is the strategy that is capturing the moves since February, especially. It is up 15,240 on the year with 100 trades, so about $152 average trade profit. Equity curve since the end of February is outstanding. This strategy does well in this type of market. You see, it takes a lot of trades. It has a stop loss and a profit target. So we're going to look at incorporating that into our NASDAQ strategies. A lot of the NASDAQ strategies are struggling right now. But this strategy has a tendency, a knack for this type of market environment. It was developed in 2008, and you can see some of the trades that it's taking. Some of the daily profits are really good. So Viper 2008 is the highlight on the day. Let's go over the rest of the trades. Gap continuation 2020. Big stop loss for 2019, big stop loss, minus 725, $700 stop loss, and especially shorting a low with a $700 stop loss just isn't going to work in this market right now. It may eventually work if this market gets weaker and the dip buyers give up, but very tight EVP 1, $1,000 stop loss, too tight in this market on momentum as well. You almost need a $2,000 stop loss if you trade momentum. If you trade a short momentum strategy, almost need a $2,000 stop loss in the NASDAQ. So that makes it difficult. Better to short rallies like Viper is doing in this trend. You see how it shorts the rallies, shorts the rally, shorts. Well, it shorts that rally, gets stopped out, shorts that rally. They're small rallies, not big rallies, but not just shorting at the low. And so Viper is a strategy that has had a low average trade profit and has gone into a good average trade profit zone for this type of market environment. So this is also included in the all strategy access. If you have that, you can trade it. Beta C, a gap continuation reverse, has had a good run down on the day, minus 1,000 on the day. Tick wave, minus 825 on the ES and the NQ. PR breakout, minus 725. VSD, minus 187.50. 60-minute breakout, minus 1425. All strategy access NQ, gap continuation 2019. $300 stop loss is definitely too tight in this type of market environment. It's just a blip on the screen. Good trade, right direction. Would be better to have a bigger stop loss or a better entry to get in at a counter trend rally. We see AT 2020 NQ. This is a very frustrating trade to see such a good entry, short right there, stopped out right at that swing high. The market did rally back, but did not get back to that swing high. So $700 is definitely too tight, even in this type of environment, to use for a stop loss. You have to use a bigger stop loss and maybe trade micros instead of NASDAQ if a bigger stop loss is too big for you. 60-minute breakout ES. You see the trades here. Sloppy downtrend, hard to short there. It's a short-only strategy. Adaptive moving average is doing well, up 47.50 on the day, but still really choppy. You can see that on the charts. 15-minute chart, makes this move back towards the highs, makes this move back towards the low. Big bounce here. The low there is 38.24.50. The high here is 38.46.50. So 20 points, 1,000-point counter trend move. And the S&P is normal these days. So let's look at we looked at the beta C, the beta B. So let's look at the gold. Gold has had a SR counter trend 3. A and B did well today, plus 475 on those trades. Cobra Gold did well today, plus 575 on that short. Surprising at the sell-off in gold. You see some other shorts in gold on previous days in this chart setup. Let's look at silver, no trades. The VSD long short setup, plus 54.90. This is just real aggressive. You can make a lot or lose a lot on any given day with this strategy. You can see how bad it did here on this day, minus 82.30 on one day. On this day, it captured that nice short, plus about 5K. Let's look at this. This is one we're not trading, but we're looking at. You can see how sloppy the equity curve is, how big the swings can get. But it does have the tendency to capture the big moves. It can take those big shorts into the close, where many strategies may struggle with that. And so that's VSD. Crude oil, one trade today, Cobra Crude aggressive, minus 535 as crude oil bounced off the lows near $60 a barrel. Natural gas, no trades on the day. RBOB, no trades. Euro, minus 50. Let's look at the optional strategies. Here's Cobra bonds. Bonds are moving towards their lows again. Interest rates creeping higher. You see VSD, Night Trader VSD, no trades. None of the Cobra 3s had any trades. And let's look at Soybeans closed out a profitable trade. It gave some of yesterday's gains back, so it was down on the day, but the trade was profitable. It went short, went long, and then it exited here. We hardly ever see any follow through. We have soybeans swing and we hold it for a follow through trade, and we hardly ever see a follow through trade on soybeans, which would give you a strategy idea that if the soybeans is up on the day, you can maybe short the close and cover at the open. If it's down on the day, buy the close, exit at the open. Alternating pattern in soybeans, I'm going to test that out. I haven't tested it, so I may be off, but because I never see follow through on these soybean swings, and I could anticipate an alternating pattern in soybeans that might work, a strategy that might work on alternating patterns. Exhaust in reverse, down on the day. VIX has been lazy at popping above 25, and it's capturing these dips that we don't normally capture. VIX usually spikes quicker than it's been spiking, so when VIX spikes above 25, the strategy stops trading, but the market is selling off and the VIX is not spiking as quickly as it has in the past, which is an interesting dynamic, and it's thrown this system off a little bit. We use that as a filter. So those are the trades on the day. About 30 minutes left to the close, and should be interesting. I do anticipate much lower prices. I do think that the recent the move higher in interest rates was discounted quickly, and that we are due for some more downside going into Friday. We shall see, though. Looking forward to potentially seeing some smooth trends eventually if the dip buyers get hurt enough that they just kind of let go and we get some smooth trends.